Well, hello everyone, and welcome to the Buffett and Beyond Research Saturday ETF report, June 27, 2026, and June is almost over. We have a holiday coming up next week, folks. And remember, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And let's look at the QQQs for Friday morning after the open. But yesterday we were looking at this line here and it looked very, very nice. But this morning, all of a sudden, it opened down. And here we are sitting on this 50-day moving average. Not fun to watch on a Friday afternoon, folks. But don't forget, next week is a holiday week going into a holiday weekend. And trading is only 4 days this coming week, and therefore we expect a usual upward bias for that week before a 3-day holiday. But right now it's looking like it wants to test this 50-day moving average, and that's exactly what it's doing as we are speaking. So we really have to wait till Monday to find out what's going to go on. And down here, yep, we still have this indicator pointing down. We thought we were going to get a short-term buy signal on the shorter-term indicator all the way up here, and then all of a sudden, nope, this still is turning down, still going down. This is our intermediate term indicator, and we don't like that one bit, of course, but we're in that type of correction right now. A lot of the money is coming out of the tech and semiconductor stocks and going into other areas, which we're going to see in a minute. And let us look at another chart of the QQQs, and these are the volatility bands, the blue line, the top line, and the bottom line, and we can see that we are pushing this bottom line down, and which is not a good sign, but we're testing that 700 level again, and we talked about that weeks and weeks and even months ago, and there we are. We're right back down there once again, and we'll just see if that 700 level holds in here, folks, because that's an important level. And up here we have this indicator that had turned down last week, and we were looking at that, and all week long it's been going in the down direction. We sure would like an update today. But don't forget, look up here. The QQQs have lost 5 percentage points. It's given up a lot during this tumultuous season, this very, very, very volatile week. And the funny thing is, interest rates are coming down. Price of oil is down around $70 a barrel, and the West Texas crude is down even below $70 a barrel right now, and you would think we'd be rallying in here because of that. And Micron did a very good job of coming up and is very excited about the coming year, and they expect orders to keep increasing over the next year and a half or so. And we just are looking at the rest of the stocks getting hit, like Microsoft. They just raised prices, and Apple just got creamed yesterday. So that's what we're looking at right now, folks. The Mag 7 that we usually look at are the ones that are getting hit the most, because the market thinks that they are just not keeping up with the whole AI revolution in here. All right, so let's see what changed this week. Look at the top of this past week, and this is home construction. Look all the way down at the bottom, and this was at the top last week. And this is the semiconductor XSD, and down 6% for the week, so you can see what's getting hit. The ARC Innovation Fund, technology down 3.5%. And back up here, healthcare actually is in the green. That's pretty amazing, folks. Home builders gained 4.5% up here. So we can see there is rotation going on, and the money is coming out of the tech stocks and going into other areas that have been just doing nothing this year. And for the year, yep, we still have the semiconductors up about 85%, and this was as of Thursday close, and right now we're about 80%. Technology following at 28%, and again, Thursday close, and right now it's at about 25%. So you still have oil up there. Here's energy, and here's the NASDAQ 100, and this is about 15% right now. And I'm talking about Friday morning. So this was Thursday's close. Friday morning's down about 1.5% so far, right at the open. And home builders, look at this, 13% all of a sudden for year to date. They were doing absolutely nothing, starting to come back a couple of weeks ago. And remember, Buffett bought a whole home building company that we heard about 2 weeks ago. And we also found out that he bought some exchange-traded stocks of home building companies in 2025. So it looks like with interest rates coming down, the home builders and home construction also are starting to move up. And let's look at our top stocks. And the XSD, we are underperforming the XSD, which is the semiconductor ETF. Well, it's up over 80%, so you can't beat that. But we're up just 48% for the first half of the year here, folks. Technology following our returns for our top stocks, 33, outperforming the XLK ETF itself. The NASDAQ 100, these are from the stocks on the computer program because we are not looking at the NASDAQ 100 anymore. There's just too many stocks that have ROEs over 20%, but very, very volatile. So we're kind of stepping back from that, and I've mentioned that over the past couple of weeks. But if you went to the computer program, a lot of stocks in there, but they're up 18.9%, but the portfolio is just getting too big because there's too many good stocks in there. Overall, they will do fantastic, but right now there's too many, so we are not looking at the NASDAQ 100, making a portfolio out of the top stocks in that because there's so many stocks in it. It's almost better to own the QQQs themselves. When it comes to home builders, the home builders are up 13% for the year, and the home construction is up 8%, 8.6% for the year. We have combined these two because there's a lot of stocks that overlap between home construction and home builders. And our portfolio is a combination of the two, home builders and home construction, and we're up 18.1%. And don't forget, the S&P is up only 7.5% right now. So we're doing 2.5 times that of the S&P 500 in the home builder stocks, which are just getting going, folks. And here it is again, and we use that for comparison to the home construction and the home builders. So this is our 18.1% in here. S&P 500 up 7.48% as of Thursday's close. Our top stocks are up 16.6%, a little bit more than double the S&P 500. Now here's something interesting I want to show you. Our dividend growth and income portfolio is up a total of 13.6%, with 4.3% of that being dividends. So we're doing very, very well in here. We're almost doubling the S&P 500 in a dividend growth and income portfolio, which is usually less volatile as the S&P 500. And then one of you asked me about the Morningstar dividend portfolio. They have a whole letter that comes out, and it costs, I don't know, $100 a year or whatever, and it's up 8.8% for the year, and 3.4% of that is dividend. But folks, there's 38 stocks in that portfolio. So we look at it, and I went over all the stocks in that because you asked a question on it, and there's a lot in there. I just don't understand how they even got in a more conservative portfolio. So I don't like the Morningstar dividend portfolio at all, and I subscribed to it several years ago as well as this year because you've asked me about it. And several years ago it was just, I didn't like it at all then, so I should have saved my money. But anyway, that's it. It's about not half, but it's much lower than our dividend portfolio, dividend and growth portfolio. We have better stocks, always have better stocks than Morningstar, and a lot fewer stocks. There's about 15 stocks in our dividend growth and income portfolio, and I said Morningstar has about 38 stocks in it. Very unwieldy with that portfolio. And we look brought this up as of 6/25 and the ARC portfolio, and I added our growth portfolio to compete against the S&P 500. and we're doing much better than the S&P 500 over the past 5.5 years. And then when we compare our top stocks in the XLK, which is the technology ETF, our top stocks are doubling the XLK ETF. And then when it comes to the semiconductor stocks, they're both the semiconductor ETF and our top stocks are down for the past week, and we're not quite doubling the semiconductor top stocks, but up 300% is not bad when the ETF is doing 167% and the S&P is doing 88%. So a lot of you have taken the growth portfolio, put some of these top tech stocks in it, some of the top semiconductor stocks in it, have made a nice portfolio for yourselves and have done very, very well with it. So, folks, we had a crazy week once again. We're coming into a short week because this coming Friday, the markets are closed, and of course, the U.S. is celebrating its 250th anniversary. So there'll be a lot of fireworks over the weekend on July 4th, which is Saturday. And we think that there should be an upward bias this coming week, considering it's a holiday weekend and a pretty special holiday weekend for the people here in the U.S. So we'll just have to keep our fingers crossed on what this market does today and how bad it reacts, and then going into next week. And it's always like we have to wait till Monday and Tuesday to see the direction of the market. So anyway, folks, go out, forget about the market, be with your loved ones, stay safe, stay healthy, and we'll see you back here in a couple of days.